Hello, everybody, and welcome to the Loan Officer Marketing Podcast. I'm your host, Chris Johnstone, and we are blessed today to be with Tony Umholtz, our first ever NFL player on the podcast, which is a huge, cool thing in its own right. But also, Tony, you have the incredible regard of being number 45 on the Scotsman's Guide this year. So, congratulations on both counts.
Well, thank you. Yeah, the NFL thing was a long time ago, Chris, but yeah, it's a big part of who I am, but that was a long time ago. But yeah, thank you. Yeah, last year was not an easy year, as all of you know. I mean, 2023 was bumpy, but anyway,
That it was. Well, it still counts in my books, and
yeah,
it's a pleasure to have you on the show. I think a great place to start is for you to tell us a little bit about how you got in the industry, how you made the transition. Tell us a little bit about your story.
sure, sure. So, I never, like many of you, I never thought I'd be in this industry. I was a finance major in college. I, was a pretty good student in school. I was a college football player, as Chris mentioned, and I played at the University of South Florida. I actually went there to play on their inaugural team. They started the football program in '97. I transferred in 1996
Wow.
and was a kicker and punter. I did pretty much all three: kickoffs, punts, field goals when I was there. And then my senior year, I had a chance to move on. I was an All-American as a senior and was able to go into the NFL and play a couple of years. And I finished my master's as well. I got an MBA in finance and wrapped that up in the off season. And I found myself like doing internships when I was playing, and had a really cool internship when I was with the Giants, actually prior to 9/11 in the trade center. So that always holds a lot of it's a tough day for me every year on 9/11. But I had a chance to work as an intern there, more on like analysts, traders. I got to learn a lot about finance. But then I found myself cut by the Patriots. I needed a job, and I'm like, well, I'm training still to get back in and into the league. And one of my good friends was a long snapper for Tampa Bay Bucks and had just was working in the mortgage industry as like an intern in the offseason. Said, you need to go interview with this company. It was Market Street Mortgage Company. So some of you might have heard of that company. They were a big company back then, 20 plus years ago. But I joined them, got trained. I went through Zenix, which was a training program that is still around this day. Casey Cunningham taught our class. And I never thought I'd stay in this industry. I was like, well, I'm going back to play. I still had tryouts with I remember I was in the 6-week training program in Atlanta. My agent's calling me, hey, Buffalo Bills want to work you out. And I'm like, well, I can't get up there. I'm stuck in this 12 hours a day. And so I kind of still went on steadily, but that first year, 2002, 2003, I closed about 12 million personal production, and I was still doing football. And I always liked helping people. I enjoyed connecting with others and helping, assisting. That's part of my nature. So while it wasn't like the ideal business for me, at first I said I was always a very hard and diligent worker in anything I did. That's one big reason I had a chance to play professionally is, I was talented, but I wasn't like ultra talented to play at the NFL level. I had to work at it. Some guys are just can roll out of bed and don't do anything, and they're just unbelievable. And I played with a lot of guys like that. I had to
Hmm.
work at it. So if you take that work ethic from sports, and I know a lot of your listeners, Chris, have probably played sports, and you parlay that into business, you're usually
Yep.
going to do pretty well, right? So I took that, and then I continued on. And I mentioned to you prior to our call, I had one more chance in 2004 to go back and play. I had a really good workout for a couple pro teams. One team was going to tender me an offer, but again, you go. How this works, guys, is when you're a free agent. This is 2004, so a long time ago, over 20 years ago. But how this works is March of 2004. It's my second year in the business. I'm closing like 2 million a month, working with some realtors and the builder, and I'm pretty good income back then for a younger guy. And I get this offer, right? But you're signing as a free agent. You're going through what's called OTAs. All right, so you're going through OTAs from March all the way to the end of June. You get a little bit of time off before training camp, and then you go to training camp. And back then, training camp's not like it is today. There's 2 days. There's no, you have 2-day workouts. There's all full pads. Nowadays, it's so different than it was 20 years ago as far as the league goes. And I had to make that decision, and I stuck with mortgage business. So here I am today, and I think we've done, gosh, over 2 billion in production in my career. So it's been,
Wow.
I won't say it's always been easy, but it's been tough. It's taken a lot of grit, especially around that 08, 09 time.
Mhm.
But last year was tough too. Last year was a tough year.
Yeah.
So that's just a little bit about me. I've got 3 kids. I'll just a little personal bio. I've got 3
Yeah.
children. My oldest daughter just turned 16. I have a son that turned 14 recently, and then a 6-year-old daughter as well. So I'm
That is
always
amazing.
got something going on, Chris.
Congratulations. So I'm interested in so much of that, but your second year in the business, to be closing that amount of volume, were you getting referrals from your career, or did you just start fresh in the mortgage industry and just go right into networking? How did you grow the business so fast initially?
Well, I've always been a connector naturally, so I just got right into helping people. And honestly, I had a few relationships, and I was young at the time, so it took a little like trusting.
Yeah.
But one thing that helped me is having that education, that degree. Like I learned how to talk, even though I didn't have experience. I at least knew how to talk to people, so it helped a little bit, But it wasn't easy, and the market was good in '04. Let's be honest, '04, '05 were really good. In '05, believe it or not, I did like 65 million back then. I did 400
Wow.
deals. So I did a lot of business, and a lot of it, and I had a part-time assistant. I was working a lot of hours and grinding. I
Yep.
really went after it. So 12-hour days back then. But that was my nature. It still is, but I, not to that degree. I was grinding. I had a builder that was referring me business,
Okay.
and I had some good realtors already. I had a couple that trusted me, that I connected with that first year, and we started rolling. So I think I did about 28 million that second year,
Wow.
but I was at an independent, correspondent lender, so we didn't have leads or anything like that. That's
That's
how it
all
worked.
referral based.
All referral based. And in 2005, again, market was booming. That was a boom time. But I had a developer as well. So I had realtors, I had that builder, and then I had a developer
Mm,
that was doing condo conversions, and I was doing those units, and that helped a lot that year too. So
that's
yeah, that was big in Tampa back then. And then to this day, again, a lot of our business still, we get a lot from past clients. It's a very diversified business mix. Um, Real estate agents are a big part of it. I'm really big with financial planners though, and
ah,
it's always been very natural connection for me, being a finance person. So that's a big part of my business is financial planners. So we probably have 15 or 20 of them that we work with, and that's a big segment of our business. And we still do a lot with, a good amount with pro athletes. I won't say, actually, most of our business is not that, but there was a time where I really did a tremendous amount, especially around '08, '09, 2010, prior to like the Morgan Stanleys and the Merrill Lynches of the world and UBSs of the world having mortgage products. They would manage their money but didn't have good mortgage programs. And then, of
right.
course, I got to know some of these guys and their agents and their business managers with my background. Choose them, they find out, hey, you're good at what you do. We'd rather use you. And I did a tremendous amount with pro athletes and celebrities. There was a 10-year period where, when the market was really down, especially down here in Florida, we had some really hard years here. Again, a while ago, but there was
Yep.
some years where we were doing 90 million, 80 million, 100 million when there was nothing going on in Tampa Bay.
Wow.
But a lot of that was the ability to do things outside our market and working with, you know, clients that weren't as sensitive to the interest rate or the economy.
Yeah.
But that's still, even we still do some of that now, but with all these, some of these guys have so much money now, Chris, they don't need you. They don't need us
Right.
as lending. So we still do some, especially with NFL and some,
Yeah.
coaches and things like that, but it's not as robust as it used to be.
I have this weird mental picture. You know how they have the hot mics now on the players sometimes, and like every so
Yeah.
often they'll let you listen to what's happening. I'm just
Yeah.
imagining like the big pileup, and I know that you were a kicker, but I'm just imagining somebody in the middle of the pileup going, "Hey guys, any of your friends, family members, or coworkers looking to buy, sell, or refinance?"
Yeah.
Anyways, yeah,
Well, it's a, the thing about that group, just like any group, it's a very high trust group. If
yeah,
you work, once you help a couple of the guys in the locker room, your name gets around, and there's people who have not done a good job, and I'm actually one of those that if I get a hold of a younger guy, I'll tell him if he shouldn't buy a house because I've been there, right? The
right.
NFL, you can get released very easily. It's not guaranteed contracts. There's been quite a few times I've told them to keep renting,
Hmm.
because it's just your experience being there in their shoes. But I think the biggest takeaway is just from the sports background is just the grit that it gives you, and it's good for this industry, right? And it's the grit, the confidence, the ability to push through tough times because you're going to have to do that as a football player and in any sport, but especially football.
Absolutely. So you mentioned that a good portion of your business now comes from financial planners. And we hear a lot on the podcast, hey, where do you get the majority of your business from? It's my past customers and it's realtor referral partners. We don't often have somebody who's done such a good job of building relationships with financial planners. So could you unpack for our listeners how you approach a new relationship? How do you get those relationships? How do you nurture them? What does that side of your business look like?
Yeah, to me, it's always been a kind of a natural fit for me. That's just my, I try to stay really, I'll even say I'm a bit of a nerd when it comes to the financial markets, right? I've just always followed it. I've done things on the side too, Chris. Like I've had my ebbs and flows with this industry. I mean, there was a few times where I felt like I was a hamster on a wheel, and I started working a bit in private equity. I started learning other aspects of finance. This is over 10 years ago now, but I did do some work in that space, and I started learning. And um, I think it's just the background of being in finance. I think it just helped me talk to them. So when I got a chance to speak to them, we built instant rapport because you
Right.
could talk the language and you built a high trust. I'll tell everyone, like, real estate agents require high trust too, right? And it's just, we have a lot of good agents we work with, and they're great. And candidly, they're the quickest business source, right? If you work with real estate agents, you can get a lead in a week, right? It's going to be fast. It's going to be quick. Builders take a little bit more time. Financial planners can take time to develop, but they're going to send you really good clients. That's the one thing that lenders don't realize is like you're going to get really well qualified people
Yeah.
and the ability to think creatively, but you got to be very, very professional, right? So, if you're used to doing some silly stuff, a lot of that will, and nothing wrong with that, right? Some realtors love it. Some of your clients might love it, but you got to be careful with financial planners, right? Because a lot of them are a little more professional, a little more polished. So you've got to watch your tone with them. It's a
Hmm.
very high trust barrier to entry, but a lot of originators can do it, and a lot of them do it. And I think it's just you're going to be working with a lot of financial planners because they're going to want to talk to the mortgage originator. They're going to want to say, "Hey, I want to understand what kind of loan you're getting. What are you doing for my client?" So it kind of started that way, and then it spreads, right? One guy will tell his colleague or his colleague, and then it spreads from there. And I've even had a couple of real estate agents that work with more professional clients, whether it's athletes or doctors. We do a lot with physicians as well. We have doctors and attorneys are big clients of ours. Um, a lot of them focus on that profession, right? So once they know that you're good at what you do and they can trust you, that becomes a big referral source for you. So that's been it's been great for us. So we have some really good ones that we work with, and I'm always looking to expand that. But I would say my biggest takeaway is just that professionalism and do what you say you're going to do
Mm.
because you'll lose that relationship really quickly.
Yep. It's funny. We had a conversation about that on the Breakfast Club. We host a morning call for loan officers Monday to Friday, and somebody was on the call and they were having trouble with the deal, and they were like, "Hey, how do I communicate with this down the line?" And the feedback overwhelmingly from us and the community was those are the opportunities. It's the hard deals. It's the areas where you really show up and not only over communicate with the client when there's a problem, but you also communicate with the partner. And
Right.
is that the type of relationship that you have where you'll take those hard deals and you'll immediately be upfront and use that as a relationship tool rather than a detriment?
Yeah, I mean, we take on hard deals all the time. I mean, communication's everything. And I do one other thing too, Chris, we didn't touch on is I have a really good team too.
Ah,
And like this production is not me, right? I have a great team. People have been with me for a long time. One of my team members has been with me almost 20 years. I mean, it's a system, right? So we have communication with all of our real estate agents, our clients, even the title companies. We try to let everyone know what's going on, right? So we even update the listing agent. We just don't give them as much detail, right? We only give them what, because some of our buyers agents don't want too much detail, but we at least tell them, hey, commitment letters in, the vanilla for the transaction. But yes, you got to update the financial planners. They want to know what's going on. The other thing is you got to be really good about interest rates and telling them. One thing that's helped me get some financial planners, Chris, is I watch interest rates, and one of them we picked up in the first quarter. I was very adamant about locking rates. If you guys remember, the first part of the quarter, rates were low to start the year, kind of almost at the level they are now, maybe just a touch higher. And then they started going up quite a bit. I mean, the 10-year treasury went up over almost 100 basis points within a matter of a few months. And I was very quick to lock one of their clients, say, hey guys, it's not worth the risk. And it parlayed into, hey, you were so right. Thanks for saving me all this money, Tony. And the advisor got involved, and it just was a home run, right? So I think just being a trusted advisor is a great way to pick up business, whether, with, from real estate agents, but also from financial planners if you're working with them, right? And giving good pertinent advice. But the team aspect is huge. I think having that communication system is really important. I also think it's important, and I've ebbed and flowed with this over my career. I'm not so strong with it right now. So this is me kind of preaching to the choir. I got to get better, but I is having a system, right? Every day you
okay.
have something to do, and I still have it on my desk. I'm in my home office today, but I have an office here in Tampa as well, and I have it here. It's on, it's sitting on my desk of what I want to do each day. It's a reminder, and being disciplined with that has always been really good. Hey, this is when I'm doing my updates. This is when I'm calling, reaching out to realtors. Here's where I'm reaching out to past clients. Having some structure is critical.
Oh, I could not agree with you more. We call it the daily success plan, and it's
Right,
2 hours every day, Monday to Thursday. There's a different theme to it.
right. Theme day.
Um, exactly. And what I'm so when you have that successful transaction with a financial planner's customer, do you have a structure for going back to the financial planner and saying, hey, can you introduce me to somebody else? Can you introduce me to another financial planner? Is it really truly organic, or is there an intention that you use to generate referrals within that community?
I have been intentional in the past. I think recently I have just been organic with it. There's been a lot of intentionality in the past. I remember, especially like 10 years ago, I remember having lots of conversations. Like any client I worked with that the advisor was involved, I followed back up with them. I wanted to do business with them. And I'm still following up. There's a few that have kind of fallen off
Yep.
that I used to do a lot of work with. One that did a tremendous amount with pro athletes, and I'm just trying to get him back again. But a part of it's just these guys have so much money; they don't need mortgages. And one thing I will say about advisors, financial advisors, is they're really good in refi markets. So as we get into more better rates, maybe in 2025, a lot of their clients have paid cash for homes. And like one of them has told me, there's one group we work with, they actually manage, they're an RIA, they manage 1.9 billion in assets. And they've been a great referral source for us. And he pretty much said, all our guys are paying cash, but when these yields go lower, we're going to want to diversify. So they're great in refi markets too. So, but I haven't been as intentional as I need to be. I probably should, write that down to be a little bit more disciplined around that. So I used to be better.
Well, all of us have room for improvement, and
Right.
you are certainly absolutely crushing it. But hopefully, there's a little bit of value there for being on the show. So, Tony, thank you so much. Um, so in closing, because I want to be respectful of your time, you're running an amazing business right now, an incredible career. If you could give one piece of advice to loan officers that are in this market, because we're going through this shift again. You've been through these cycles before. I've been through these cycles before. We're heading into what I feel like is a little bit of a pivot point.
Right.
What's your advice to the industry and to other loan officers going into this marketplace on how to best prepare?
I would say diversify your business, right? We never know what's going to happen. It's one of the things that's helped me in my career is having, you have your first time home buyers, you have your, higher end professional buyers. We used to do construction to perm loans. We're not really good at them anymore, but I used to be really big in that when I had it. I was always willing to diversify, and that helped me stay fairly consistent throughout every year. Even in 2022 was actually my best year. I did 265 million that year. And 22 was not that easy, but we pivoted into a product that we were offering and we really went after it in heavy that year,
Yeah.
especially the first half of the year. So I think just the ability to pivot and adapt. The one thing and this just goes true, is things are never the same, right?
Mm.
Things are always different.
Yeah.
And we can't go back and say, well, things were like this then, or I've even heard some owners of mortgage companies say, oh, I just like the other cycle, like we had and yes and no, right? The industry, nothing's the same.
That's right.
Nothing's the same. So I think we always prepare and we try to take advantage of the opportunities that are ahead of us and be diversified and have the ability to adapt. I think that would be the biggest advice I could give everyone, because we just don't know. Rates should go down, but they may not, right? If inflation
Yep.
starts coming back up, we need other tactics. So we just have to be adaptable.
Stay going on those referrals. That is amazing. That's super valuable. Tony, again, thank you for being so generous with your time and for being on the show. If loan officers out there want to learn more about you or they want to reach out, how do people get a hold of you? What's the best way to find out about you?
Well, I'm on LinkedIn. I won't say I'm the best social media guy, but I am on LinkedIn. I do have a Facebook page too. But cell phones out there. LinkedIn's great. So happy to connect.
Awesome. Well, thank you again. And to all of our wonderful listeners, that is definitely worth a 5-star review on iTunes. And we are looking forward to seeing you in the next episode.